One of the best ways to secure your financial future is to invest, and one of the best ways to invest is over the long term. It may have been tempting over the past few years to deviate from the long-term approach and chase quick returns. But with the market's current high valuations, it's more important than ever to focus on investing for the long haul while sticking to your game plan. Investors today have many ways to invest their money and can choose the level of risk that they're willing to take to meet their needs. You can opt for very safe options such as a certificate of deposit, CD, or dial up the risk and the potential return with investments such as stocks, mutual funds, or ETFs. Or you can do a little of everything, diversifying so that you have a portfolio that tends to do well in almost any investment environment. The best long-term investments in April 2022. 1. Growth stocks. 2. Stock funds. 3. Bond funds. 4. Dividend stocks. 5. Value stocks. 6. Target date funds. 7. Real estate. 8. Small cap stocks. 9. Robo-advisor portfolio. 10. Roth IRA. Overview. Top long-term investments in April 2022. 1. Growth stocks. In the world of stock investing, growth stocks are the Ferraris. They promise high growth and along with it, high investment returns. Growth stocks are often tech companies, but they don't have to be. They generally plow all their profits back into the business, so they rarely pay out a dividend, at least not until their growth slows. Growth stocks can be risky because often investors will pay a lot for the stock relative to the company's earnings. So when a bear market or recession arrives, these stocks can lose a lot of value very quickly. It's like their sudden popularity disappears in an instant. However, growth stocks have been some of the best performers over time. If you're going to buy individual growth stocks, you'll want to analyze the company carefully, and that can take a lot of time. And because of the volatility in growth stocks, you'll want to have a high risk tolerance or commit to holding the stocks for at least 3 to 5 years. Risk reward. Growth stocks are among the riskier segments of the market because investors are willing to pay a lot for them. So when tough times arrive, these stocks can plummet. That said, the world's biggest companies, the Alphabets, the Amazons, have been high-growth companies, so the reward is potentially limitless if you can find the right company. 2. Stock funds. If you're not quite up for spending the time and effort analyzing individual stocks, then a stock fund, either an ETF or a mutual fund, can be a great option. If you buy a broadly diversified fund, such as an S&P 500 index fund or a Nasdaq 100 index fund, you're going to get many high-growth stocks as well as many others. But you'll have a diversified and safer set of companies than if you own just a few individual stocks. A stock fund is an excellent choice for an investor who wants to be more aggressive by using stocks but doesn't have the time or desire to make investing a full-time hobby. And by buying a stock fund, you'll get the weighted average return of all the companies in the fund, so the fund will generally be less volatile than if you had held just a few stocks. If you buy a fund that's not broadly diversified, for example, a fund based on one industry, be aware that your fund will be less diversified than one based on a broad index such as the S&P 500. So if you purchased a fund based on the automotive industry, it may have a lot of exposure to oil prices. If oil prices rise, then it's likely that many of the stocks in the fund could take a hit. Risk reward. A stock fund is less risky than buying